Good morning, everyone, and happy Monday. So the market honestly is not looking too great this morning. It's holding up in a decent way, but I wish it looked a lot better. We are set for another pretty big week in terms of earnings and in terms of the FOMC and Powell and rates and all that stuff. So this week's definitely going to be pretty important.
Yeah, it really is. Powell's going to be speaking on Wednesday at 2:30 p.m. and the Feds are going to have that interest rate decision come out Wednesday at 2 p.m. Eastern time. So keep that on the radar this week. Definitely jot that one down because it's going to be a big event there. And as we know, Mike, the SPY is probably going to go insane heading into this. So far this morning, it looks like the VXX is popping up a little bit heading into this event as well. So we're definitely seeing some volatility come in. And man, I'm looking at the SPY here. And like you said, it's not doing the best today. It is slightly green compared to Friday's close, but we just haven't seen too much good price action yet this morning. Although I did notice that Bank of America is actually climbing my watch list here. So this is actually some good news to start the day.
Yeah, so some stocks are looking okay this morning, like Starbucks and Intel and Logitech, Bank of America, like you said, and other ones like that. Like they're looking decent, but then again, it's like Friday was such a disaster. It's like it's nice to see a little bit of green, but we still have a lot more movement to make up. Like, you know, at least in terms of my watch list, Tom, it's like split 50-50 in terms of red and green.
Yeah, mine is too. And most of the ones in the green are those slower mover, safer stocks. Like you mentioned, Intel, Starbucks. I even see like KO on there, Pepsi. Target's actually up there quite a bit, believe it or not, even though they're barely moving on the chart. Like you said, they're up like 1.2%, not bad. I saw Activision had some movement, Mike. You know, maybe they're having some nice movement here because of all the news over the weekend with Warren Buffett, of course. You know, that might help them this week. Who knows?
True. Yeah, that's definitely another point there. I was looking at Activision, and it's not like a bad trade in my opinion. Like you can scoop it up for like let's say $77 now, and if Microsoft buys you out for $95, so it's $18 per share in like profit potential. So let's say we did 18. Let's say we did 18 divided by 77, which is about the current price. It's like a 23.4% return. I don't know when the deal is set to close. I believe it's next year or at least in a couple months, but it's not a bad trade, you know, because it doesn't really matter what happens in the market as long as, you know, regulators approve the deal with Microsoft. Like it's it's over. So it's not bad.
Yeah, and I can't believe Warren Buffett has such strong convictions that the deal is going to go through. So, you know, if he has those convictions, Mike, maybe he would know something that we don't. You know, I know that he knows a lot of these big CEOs and people who work for these companies and stuff. And, you know, like he said that Microsoft has the cash. It's just really pending the regulatory issues and stuff. And I think that the deal will end up going through, Mike. Like, I don't think that the regulators will hit anything too hard for this one. I know it's a huge deal, but I don't think that Microsoft is like creating a monopoly or doing anything like that by getting them. So hopefully they do get it, Mike. And that would be a great deal. Like you said, 23% from 77 to like 95. That's a pretty big gain for just an arbitrage opportunity.
Yeah, for sure.
Usually it's closer, I feel like.
Yeah, for sure. But yeah, and then Tom, another thing I want to talk about are these poor precious metals. Check out gold and silver, specifically GLD. It's down around 2% today, which is quite a bit. And what appears to be the main reason for this is obviously we have the FOMC event this week, with a 99% chance of happening. There will be a rate hike. It just depends on how big that hike will be. When rates rise, I feel like a lot of people start to transition out of gold, but not really. It's just like less money is flowing into it. For example, like let's say when we have bonds like 2 years ago or so, when COVID really happened and the world was locked down, when the feds were just printing money like crazy and had rates at basically zero, anyone who bought bonds was, I don't want to say dumb, but it's not a good decision. While we have rates rising, it makes bonds and other assets kind of like that more attractive. and therefore that money that can be or that could be flowing into gold and silver flows elsewhere.
Yeah, it really does. That's the metals market, Mike, is so complex and there's so many different things weighing on it. Like you said, the bonds play a big role in those treasury yields, of course, and everything like that. I know lots of people have said that the US dollar and the 10-year index also play a huge role. And as we can see, Mike, the 10-year treasury index here has been flying up over the past few months here. We haven't really looked at it too much since it was around like $20, but it's gotten pretty high, all the way up to 30 now over the past couple months. This is just an insane rise here out of the index. As we can see, GLD is starting to kind of turn over, like Mike said. So lots of big economic factors at play here. And the FOMC meeting this week is going to be huge because they're trying to stop inflation. And, gold was at its peak whenever we had that peak inflation fear, Mike. And that was also right around February 24th, which I remember you said that's like the beginning of the Russian situation. And, gold started going crazy for those couple weeks following that. So who knows, maybe GLD could go up if something happens with Russia again. But for right now, it looks like you said it's dipping back down with the rate hikes trying to combat this inflation, which is pretty good though. In the end, we need this to happen because the inflation was getting so high. I just can't believe we're back to like almost 1970 levels now.
Yep. Uh-oh, Tom, check out the SPY. It tried to run up for a second, but we are now currently making new lows by the second.
Ooh, we are. We're almost back below 410 too. That's a big support. I know we were looking at this in last night's video quite a bit here. So going back to that low of February 24th, like we just talked about, it's right around 410. So we'll have to see if this can end up holding or not, but definitely not looking good right now. I have a bad feeling, Mike, the market is going to keep selling off heading into the FOMC. Hopefully it can turn around after that. But man, it seems like there's just a lot of negative sentiments coming in, whether we're seeing the VIX start to rise or whether we're starting to see the SPY fall. I just feel like the volatility is starting to get pretty accelerated to the downside, which is a pretty big negative here.
Yeah. Jay Deep mentioned Amazon, Tom. That one's still bleeding lower too.
Oh my gosh, it's all the way down to $2,400. This is rough out of Amazon. Another 3%, and I know they already had that initial huge drop there. And if we look at them on the daily chart, especially like the max daily, Mike, they're back to levels that they were at back in May of 2020. So that's really telling, almost 2 years ago now.
Yep. And even like the powerhouses like Apple and some of the other ones, they're trading lower too. So, like sometimes when the SPY's looking weak, if you have like the top players like Apple and Microsoft and all them like holding up well or like at least uptrending, then it can kind of soften the blow. But we're definitely not seeing that. It's actually the opposite.
Yeah, it really is. And I feel like, Mike, a lot of these technical setups are just looking terrible too. Like Apple, for example, had lower highs here just a month ago, and now they're starting to break back below to some of these supports. It's going to be tough here the next couple of weeks. These stocks are at crucial levels. I keep talking about the SPY looking extremely bearish here. And I mean, Mike, we're starting to break below some of these key supports in big ways. Like this is an extremely bearish setup, and the market has a lot of negative price action going on right now. Like you said, with some of these key stocks, even stocks like Tesla, for example, have been really getting hit hard here. And, I know that they're no Apple, but still, I mean, compared to Microsoft and the rest, they're definitely one of those bigger players. And, we're seeing a lot of stocks falling off. The SPY is going down, and I feel like we're at like kind of like a peak fear moment, Mike. We have the FOMC meeting this week, and who knows how brutal the sell-off's going to be till Powell speaks. I mean, I'm a little worried at this point.
Yeah, it sure feels like peak fear, but in reality, it's unfortunately probably just the beginning. I hate to say that, but like especially when you look at that like long-term SPY chart, it's just it's tough. So we'll see what happens, and kind of like what you said, Tom, with Powell and the FOMC and all that. It can be very good for the markets, but at the same time, it can be very, very bad. Like a lot of times, especially over the past 2 years, Powell has done a great job at keeping the markets up and booming and all that stuff, but it's not always like that. Sometimes FOMC events can be like almost like the boost, but to the downside.
Yeah, it really can, and we've seen that a lot in the past, especially whenever Yellen was the Fed chairwoman. So that's a big thing because in the past we've seen those big movements off of those meetings before to the downside, and I hope it doesn't happen, Mike. Like we keep talking about, the market's pricing in a huge basis point increase here. Mike, look, it's now at 99.8% that we're going to have a 75 to 100 basis point increase. That is pretty telling there. You know, if we end up raising the market by 0.75 or 1%, or I should say raise rates by almost 1%, that would be insane. I know Powell kind of spoke a couple weeks ago, Mike, and I think it was at that International Monetary Fund debate. He said something about, you know, the Feds might need to raise rates at 50 basis points. But as we can see by this chart, Mike, the market is really pricing in even a higher rate hike here. So I'm curious to see what they're going to do. But, you know, if Powell comes in more hawkish than usual, you're definitely right. It can cause a lot of volatility to the downside. And I hope it doesn't happen. Like you said, he's been a good cheerleader, but at some point he's going to have to make the market move lower. And Mike, the main thing is he has to try to combat inflation. You know, that's the biggest thing here. They have to get that inflation lower, and the only way is to start hiking these rates at a rapid pace.
Yeah, and it's like a tough spot because like Powell's kind of juggling between like, all right, inflation's terrible. We need to get this under control by, you know, rising rates. But at the same time, it's like we don't want to put ourselves into like a recession. You know what I mean? By like just like eliminating like all, I don't know how you want to word it. But the main thing is he's kind of like juggling two important factors right now. And he has to play it in a very smart way. Now, what I'm wondering is kind of like how you pointed out, Tom. You said there's like a 99% chance of a 75 to 100 basis point rate hike.
Yeah, it's priced in on the CME Group's chart here at 99.8%.
Wow. So what I'm wondering is, let's say Powell comes out tomorrow and says, you know what, actually we're only going to have a rate hike of 50 basis points to 75 basis points. And then the market hopefully pops up off of that because it's relatively dovish. But at the end of the day, it's still a 50 to 75 basis point rate hike. We don't know that, and we will only know that on Wednesday. But I don't know, it's just something to think about.
Yeah, and there's so much uncertainty. You know, like even though that, for example, this website or this chart is pricing in a 99.8% chance, you know, it could always be different. Mike, I remember a long time ago whenever Yellen was going through like a different rate hike cycle, I remember they were talking a ton about rate hikes going up. And Mike, it was funny because everybody thought, well, hey, if the Feds raise rates, then the market will fall. But I remember one time they raised rates and the market actually went up, and everybody was like, how could this happen? How could this happen? But the reason the market went up is because the market wanted them to raise rates because of the inflation getting out of control. So sometimes, you know, the market can do some crazy things. And of course, just keep in mind that all these analysts are going to try to explain it, you know, in a certain way. So whichever way it plays out, they're going to make it sound good. So always keep that in mind, that sometimes the market doesn't do what it's expected to do. So don't just buy puts this week expecting, you know, the SPY to start flying down, because like Mike said, there could be all types of different stuff go on, whether they don't raise the rates by as much or whether they raise them by more than expected or whatever it is. You know, it's pretty crazy actually, the uncertainty that goes into these meetings. Everybody really acts like they know because over the past couple of years, the Fed has always done everything to expectations. But with desperate times, call for desperate measures, Mike. And, you know, we might have to see the Feds do something crazy.
Yeah, we'll see. Tom, check out the market really quickly. Like, just a couple minutes ago, we were breaking lows. The stock market was tanking. And here we are. We are now at the high of day, at least in like trading hours, you know, excluding pre-market, and we are blasting to the upside. I'm not going to complain about it, but just goes to show you the levels of volatility that we're looking at.
Yeah, definitely. There's a pretty big intraday resistance here, Mike, right around 413 on the SPY. Like we hit that right at market open and tanked down there. Maybe we'll start to pop back above there and then head towards those pre-market highs. You know, that in pre-market, we were all the way up to around 415. So I would definitely take some more uptrend here if the market would give it to us. Mike, I will say I'm noticing a lot of stocks on my watch list getting more in the green here. You know, I would say my watch list is probably like 70% green, 30% red now, and a lot of bigger plays are coming into the green. I even noticed plays like Adobe coming up, PayPal, Asana. Man, lots of these growth stocks are having a pretty good day. Even the chip stocks like Nvidia, look at them today. They're pretty much straight up. Even AMD is exploding. So we're seeing some pretty good moves today.
All right, there we go. So with these comments, we have Mike saying, I'm going to start averaging in on Apple and Costco. Good stuff. Yeah, two powerhouse companies. So there we go. What else? We have Jerry saying, why do you think Buffett just bought into Chevron? So CVX. I don't know why. I know that he's been buying up a lot of oil plays lately. He just entered OXY relatively recently. To my knowledge, he's had Chevron for some time now. I'm not sure exactly why he's buying these oil stocks, to be honest, but he knows what he's doing. I was looking at Chevron's fundamentals on the dashboard, and I'm not seeing anything that like really caught my eye in terms of like valuation or anything like that. Let's see. I mean, like, I know oil prices have been on the rise, which obviously benefits Chevron. They're like a slow-moving value stock type play. Their revenue's down significantly, though, over the past 10 years. So in 2012, what they do, Tom, is they had $230 billion in revenue. And then in 2021, they did $155 billion in revenue. So they're down significantly over the past 10 years. And keep in mind, like, the inflation that we've had since then, and, like, it's still down. They pay a decent dividend at, like, 3.5%, which isn't bad.
Yeah, that's actually not a bad dividend there at all, really. I mean, that's pretty big for a nice oil stock. I wonder what, like, Oxy pays, if they even pay anything. Yeah, see, Oxy pays, like, nothing. Zom probably pays. Okay, so Zom pays around 4%, so that makes some more sense, but look at all these oil companies, though. Like, all of their revenues, Mike, have been really dipping down over the past 10 years, like you mentioned. That's really telling there, and I think that kind of shows how oil is slightly getting phased out. You know, I know that obviously there's a lot of talk of EVs and everything, and that's going to be huge in the future with hitting oil companies. Right now, though, Mike, I feel like maybe Buffett is obviously crunching some numbers. He has a lot of analysts working for him. What I'm curious is that the oil prices going up in the short term might justify these companies going up over the next couple of years. But then after a couple of years, I have a bad feeling that a lot of these oil stocks are going to get destroyed after this period of good revenue because, you know, they're going to benefit because people are getting more EVs. You know, there's more regulations coming out. And obviously all the inflation and everything is causing the price of oil to fly up. So that's helping a lot of these companies, and it might for the next couple of years. But Mike, like we've been talking about, eventually a lot of these oil companies are going to get hit hard whenever EVs get more integrated. And as we know, over the next 5 to 10 years, companies like Ford and General Motors and stuff, they plan to have like half of their fleets become EVs and stuff. Like, I don't know the exact numbers, but I've seen some pretty crazy goals for the next 10 years out of some of these companies as far as electric vehicles go. And you know, we've been talking about it a lot, but at some point that'll definitely start hurting these oil companies. But in the short term, I mean, I wonder if Buffett's been honestly looking for like a nice boost in revenue. Kind of like what you said, a lot of these factors have been helping, and I feel like they could even get more accelerated if like Russia continues their stuff.
Yeah, we'll see. You know, there's a lot of variables, and I'm sure Buffett has done his research pretty big. So we'll see. What else? Give me 1 second, Tom. I'm just doing a quick scan to see what we have moving. Of course, DraftKings is breaking out today. Zoom's not looking too bad. Disney's not looking too bad. Yeah, it's actually a decent day right now.
It is definitely for growth here. I actually really like the setup with DraftKings, Mike. They kind of bounced right off that 1350 support this morning, and they bounced off that last week and moved up on Wednesday. So I'll take it. You know, it seems like a pretty decent support level. If we look at DraftKings on like the 180-day, 1 hour chart, they've been consolidating a lot down here at the bottom. And, you know, I hope that they can start to finally move up. Like I said, this is a decent support. And if $13 is the bottom, I'll definitely take it. But they're going to need a nice earnings report. As we know, Mike, they have earnings coming up on Friday. That's going to be huge for them. And man, we need a nice boost in revenue or something, or maybe even less money spent on ads because they need some type of boost here with capital. Because as we know, Mike, they've just been spending so much lately that they need to start making up for that soon.
Yep, no doubt. Looking at some of the other plays like Zoom, that one's breaking out too. We're back above 100.
Yeah, wow, we are. Yeah, back above 100. That's a big psychological level there, big support. So glad to see that. That's a really nice thing to see this morning. As far as Zoom on the daily, Mike, it's so tempting to buy them at $100 a share. I've actually been like putting buying shares of Zoom off. I did sell a couple puts on the way down, but I never got assigned. But now that they're at $100, actually not looking too bad here. I might have to scoop some shares up, especially with a lot of earnings coming up. Like if we start to see some growth pop, I mean, I think Zoom would be one of the ones that follows in sympathy for sure.
Oh yeah, 100%. And at least like looking at the technicals, they have been flat more or less over the past month or two, while a lot of these other stocks are still breaking down. So I think that's a decent sign too. Zoom is one of the growth stocks that has pretty good fundamentals too. So I think it's at a good level. I've been saying that for a while, but when you look at their fundamentals, they look pretty good.
Yeah, we're always talking about their fundamentals. Let's bring them up one more time here. I know we're always saying that they're like one of the growth plays that actually have decent fundamentals compared to most of these other stocks. Like whenever we look at stocks like DraftKings, Palantir, Peloton, stocks like that, it's like, man, their revenue is decent sometimes, but then their net income is sometimes just so negative. It's like, man, but Zoom's done quite well. Their net profit margins are fairly high. So far they've done well with their revenue. And the thing that's awesome, Mike, is like they were expected to really slow down their revenue, which of course it might still slow down a little bit, but you can see the revenue still going up over the past few quarters here. And we always say this, but they've been going through a lot of like adversity because they've obviously, a lot of people have been saying that Zoom should lose a lot of users as the world starts to get back to normal from COVID. But as we've noticed, Mike, they might have lost a little or they slowed down a little, but they still have a lot of money coming in, which is a good sign. And it's definitely not falling off like a lot of these other companies. Like if we go look at Peloton, for example, you can really see where the downturn starts to come in. So, good thing that Zoom's doing a lot better.
Yeah. So that's good there. I mean, Zoom is cash flow positive. The revenue is great. Their earnings per share, their PE ratio is only 23. Their gross margins are 74%. Net margins are 33.5%, like Tom said. They're profitable. What I don't like is that their shares outstanding have been increasing. However, they did announce a buyback, I'm pretty sure. So that's good. That'll kind of reverse those effects. And their price to sales ratio is like 7.47. And then to compare that, Apple's price of sales is like 6.65. And Apple has gross margins of 42% and net margins of 25%. But again, Apple's a different beast. But it goes to show you that Zoom has better gross margins and better net margins and only a slightly higher price to sales ratio. So that's good. But yeah, I mean, I'm excited for Zoom, and especially at the level it's at. It's hard to ignore, in my opinion.
Yeah, and Mike, correct me if I'm wrong, but doesn't Zoom, every time they report, don't they have some weird number that they look at pretty hard? And I think it's something like users that spend over 100 grand with them or something like that.
Yeah, something like that.
Yeah, they always have some type of number like that, and those numbers have been pretty good over the past couple years. So hopefully their user numbers come in better than expected. I think that'll really help them. Even if like their revenue and stuff slows down a little bit or doesn't rise at the pace of like last year or anything, I still think as long as those users come in okay, they'll do pretty good. So hopefully that's good. And of course, Mike, as we know, those outlooks are really important. Zoom's going to be reporting, it looks like, on May 31st. So the last day of the month there. So pretty much a month from now.
Yeah. And then they did approve of a buyback program up to $1 billion, which It doesn't sound like a lot, but Zoom's only a $30 billion company, so it's actually a decent amount percentage-wise, especially when we look at like some of these buybacks from like Apple and I think Google and all those other ones. Like I know they announced like multi-billion dollar buybacks, but then again, when you're like a $2.5 trillion company, it has less of an effect, but still. So there are some good things with Zoom. But I guess we'll see what happens on May 31st.
Yeah, we will. That's going to be a big day. Like I said, hopefully those user numbers come in better than expected. But Mike, I'm seeing actually a lot of stocks here this morning starting to come up in big ways again. Teladoc is really breaking out this morning. I know they got destroyed with earnings last week. They were one of those stocks that, they did have that one unfortunate thing that hit them pretty hard. I can't remember exactly what it was, but they ended up falling down to negative 41 on their EPS. They had to pay like a really weird fee or like a weird tax or something like that. So they got hit pretty hard there, but look at them come back. They're up 7% today, which is awesome. We have Roku moving up another 5.7%. Facebook here is coming up in a pretty good way, Mike, actually. Facebook is coming up to that big 210 resistance from last week. So that's actually looking pretty hot, believe it or not. And Neo's up, Zoom's up. I mean, we have a lot of growth stocks moving today.
I'll take it. Let's see. It looks like Neo and Facebook are on the rise too. Check those two out. Not bad. What else? Let's see. Yeah,
Asana, Spotify. I mean, lots of these stocks are flying up. It's a pretty good day actually for growth. You could almost name any of them, and they're pretty much doing pretty good.
Yeah, there we go. Awesome, Tom. It's so unusual to look at these growth plays and they're in the green, because I'm not gonna lie, I'm a little bit skeptical, because every time this happened over the past 6 months, they just turn over and fall by 20%.
Yeah, they do. Even over like the past couple weeks, if we look at a lot of good moves, like let's go to DraftKings chart. Look at this over the past week. Like we'll see these big moves early in the morning, like DraftKings on Friday, and then by the end of the day, they're negative 3%. So the day is definitely not over yet, guys. Who knows how these stocks are going to end up? But so far, they have a lot of momentum. Maybe this will be like kind of the bottom, Mike. I hate to try to call the bottom here, but DraftKings bounced off $13. Now they're hitting off this $13.50 support here today. So not looking too bad. If it is the bottom, I'll definitely take it. But lots of stocks are moving up. Seems like the momentum is coming in waves in these stocks. Like, for example, lots of stocks are moving in sympathy with each other today, which is great. A lot of these EV companies like Rivian and Lucid are even coming back, which even at market open, a lot of those stocks were dipping down in a big way. So good to see them coming back in the green. Even Disney, Mike, is back in the green, which is nice. I know they've had a lot of political news lately that they've had to deal with, to say the least. So that's good to see them coming back. And, I think Disney's one of those stocks, Mike, that with them down to, what is it now, 110 almost at the low over the past few days, I just can't believe how low they've been. And I feel like this one's going to be a pretty good dip buy eventually.
Yeah, that's good. That's a good point. When's their earnings?
Their earnings are pretty soon. It looks like on May 11th. So not this week, but probably next week.
Yeah. All right. Good to know. I'm really just looking at Facebook right now. It is getting very, very close to its high from Friday, right around 212.48, and it's moving in a good way. Facebook's at a pretty awesome level, in my opinion, like a lot of other stocks are. But I just hope that this can be the bottom, because I feel like it's been months where these stocks just keep getting destroyed and destroyed and destroyed. And yeah, they'll have a couple nice pops here and there, but it just normally is just another, I guess another big downtrend is just almost always followed by these small pops. So hopefully it's the bottom. Of course, no one can tell, but if any week has a chance to make it the bottom, it would be the week with Powell's rate decision.
Yeah, definitely. That'll be huge later in the week. Hopefully that helps these stocks go up even more, and it might not. We'll have to see how the market digests the news, but it's definitely coming up today, Mike. Facebook is, and it's looking really hot. I'll say ever since earnings last week and they exploded, it's been in a pretty nice setup. They've been holding their ground too. Like, Michael, a lot of these stocks, they'll pop up with earnings like Facebook did up to 210, and then they'll start to fall down a little bit more and give a lot of those gains back. But Facebook has really held its ground, and I just love the way it's consolidating up here, looking pretty good. So like you said, hopefully this is the bottom. It might not be for him, but it's still a pretty decent price point. Whenever you look at that max daily chart, the high is at 384. You could buy him now if we're at 210, and honestly, 210 is a great level. So I like it, Mike. Definitely a pretty good play here. And I'm like I always say, I'm someone who doesn't even particularly like Facebook as a entity or like as a group, but their stock is great, and I think they're a pretty good platform. They, like I kind of said, they've almost monopolized like interacting with family members and stuff. Like it's really hard to find another app that allows you to do what Facebook does with your family and stuff. So pretty good platform there. It's moving up, and even Snapchat and Twitter seem like they're doing decent today, Mike, which is kind of cool.
Yeah, we were looking at some of the stats with Facebook the other week, and I think we ended up coming to the conclusion that I think just under 40% of the entire world uses Facebook services in one way or another, whether it's like Instagram, Facebook, WhatsApp, or anything like that. That is a giant number, and you have to keep in mind that like we're talking about like almost 40% of the entire world. Like that's a ton. Not many other companies can say that 40% of the world uses their products. And another thing you have to keep in mind is like what percentage of the world even has access to internet. You know what I mean? So when you factor that in, I'm sure Facebook's, I guess you can say, quote unquote, market share is even higher than we think in terms of like real like leads or real like prospects.
Yeah, it is. And I've actually seen some articles over the past couple weeks, Mike, that tried to point out that Facebook's foreign market is huge, to the point that in the future their foreign markets might bring them in more income than even the US markets, which is pretty telling. I know that they're pretty big in, a lot of like South American countries and stuff like that. Unfortunately though, for Facebook, what is a little bit of a bummer is that I believe they're like banned in a lot of countries. So I believe Russia has banned Facebook. I believe anyways. I think China did. North Korea. I don't know all the countries, but obviously some of those bigger ones did ban them, at least for a while. So I'm not sure if that's still the case, but that does suck for them. But in the end though, if those countries, they've been doing quite well without them. So if the countries bring them on board, then that'll probably be amazing news. So either way, I think it'll be okay, because those other markets will be huge. Like I said, South America, Brazil, Canada, even European countries. Like I know they're all over the place, which is great to see. Almost everybody I know has Facebook, Mike. Honestly, I only know like 2 people that don't have a Facebook, and to be honest, these are almost like off the grid people anyway. So
yeah, for sure. And just one other point is like, yeah, like Facebook's definitely banned in some of those countries, but even companies like Google are banned in some of those countries too. So like I know like in Russia they don't use Google, in China they don't use Google, of course they don't use Google in North Korea. And I'm even on a site right now that says that even in South Korea they do not use Google, they use Naver. Yeah, so I thought that was interesting. I would have thought that Google would be in South Korea, but guess I was wrong.
yeah, I would have thought that too. It's pretty crazy when you hear all of the different things that are in other countries. Like I know we get pretty caught up in the US, and it's hard to put yourself in other countries' shoes, of course, because it's pretty insane. Like I remember just the other week, Mike, somebody was talking about like an Uber Eats version of a company over in like Singapore or something. I never even heard of it, but it was a pretty cool looking like penny stock, and there's all those different types of companies that are still good companies. It's just that they're in foreign markets, and it's hard to read a lot of those different markets there. But it's definitely telling, because what's been interesting is that a lot of these companies like Google and Facebook have done extremely well, Mike. And if some of those other countries come around and add them, like I said, that could maybe be really good news for them. If like, for example, maybe after a lot of this war and stuff goes on, maybe China will come around and allow some of these different stocks or something like that. I know, especially if Facebook pays them some money, then they'll really probably be enticed to do it.
Yep. Alrighty. So let's see. Looking at some of the other stocks that we have moving in a big way, it looks like Exxon Mobil is definitely trending up there, Tom.
That's pretty cool to see. Let's check that out. XOM, yeah, coming up in a big way, 1.2%. Nothing crazy, but I'll definitely take it after that dip on Friday with earnings there. Yeah, glad to see it coming back. I wonder if it's coming back on that news of Warren Buffett just buying up these oil plays, because I know that like last week Chevron was down, Exxon was down, like a lot of these plays were kind of moving lower, and I was a little bit worried heading into this week, thinking that crude oil might fall down, but as we can see, crude oil futures did fall, but the oil companies are moving up, which is kind of interesting. It's been the opposite of that over the past couple months, but as we know, they're not totally correlated, but usually if oil is down, the stocks are down.
Yep. We have Slick saying, good morning, Mike and Tom. Shout out to the boy Hunter. Let's go. There we go. Welcome to the stream, Slick. It's been a while. What stocks are you watching? We'll definitely take a look at them. Tom, what stocks are you watching?
This morning there's a lot. My favorite ones are the chip plays, though. Probably by far here, AMD had a great move this morning, back up towards 88, which was awesome. Nvidia moved up. I believe even Intel. Yeah, even Intel's been moving up, Mike. And I know Intel got really close to that long-term support last week. If we look on the max daily chart with Intel, keep your eyes on this green support line. Like, Intel's bounced off of this, like, I don't even know how to count this, like 10 or 12 times over the past few years. So big support there. It kind of looks like that they're going to have some issues holding this over the next couple of weeks. So definitely keep it on the radar. But I've been loving these bounces, Mike, out of AMD and Nvidia this morning. They've been moving quite well. And to me, these are some sectors that have been beaten down. Like if we look at AMD on the daily, they've fallen below $100 lately and they just keep going lower and lower. And I'm thinking in my head, like at some point, some of these powerhouse chip stocks will have to start coming up. Maybe it'll happen whenever some of these growth stocks start moving, but hopefully the FOMC helps it this week.
Yeah. Can you pull up the earnings calendar really quick?
Yeah, definitely. Let's see for the week here. Yeah, here we go.
Perfect. So I was going to see if there were any major earnings today, but not really. It looks like tomorrow is like I guess when things start to intensify. Tomorrow after close, we have AMD, Airbnb, and Starbucks, which are all pretty big companies.
Yeah, those are huge. And even tomorrow before open, we're going to have Pfizer, which has had a lot of news lately. So I don't know how these companies will end up reporting. I know that AMD is going to be big, like I just talked about. I love the movement with them, and they've been falling down a ton lately. I remember even Intel, they kind of fell on their earnings the other day, Mike, and their CEO came out and said that he expects the chip I don't know what you'd say this, the semiconductor slowdown or like the chip delays to last all the way until 2024. So I don't know if that's going to be the case for AMD or not, but some of these outlooks are going to be definitely very important to look at here. So that'll be big tomorrow, Mike, with AMD. I know even Airbnb is very news oriented. So hopefully they report that more traveling's going on, more bookings are happening. That would obviously help them out quite a bit. So hopefully we see some nice numbers come in, Mike. And Friday, we can't forget about DraftKings, of course. That's going to be big. But, Mike, tonight we do have Mosaic reporting. And I will say MOS on the daily chart has been quite interesting ever since this Russia situation has accelerated their momentum. So if they don't report good earnings, I could see this one starting to crash back down.
Yeah, that's true. It's been doing very, very well over like the past couple of months, but I definitely know what you mean.
Yeah, it looks like it's like back on the big downtrend here. And, just this setup that we're seeing here over the past couple weeks is just not looking the best, especially today. It's tried to come up, but now we're kind of selling back over here. If we do end up breaking these lows of maybe like 61.50, I feel like MOS could start selling off a little bit more, especially when we look at that daily chart. It's so overextended that at some point we're going to have to see some type of pullback. And, we've been expecting this for a while out of some of these. What was this, Mike? A potash stock?
Yes.
Okay, so yeah, potash play. I know MOS, IPI. Was there any other ones?
Yeah, NTR was decent too.
Okay, NTR, yeah, Nutrien, yeah. It's kind of in this. NTR is actually in almost the same exact setup as MOS, believe it or not.
Yeah. All right. Slick mentioned TSM, so he's looking at that one. Let's take a look. TSM, yeah, it's been doing well over like the past couple of I don't even want to say the past couple of months, but like over the past couple of years. But over the past couple of months, it's been brutal. Like a lot of these growth plays. They also just reported earnings too, but it doesn't look too bad for like a dip buy with shares.
Yeah, I don't think it's too bad. Whenever I look at TSM here, I start to think of all these other chip stocks, and I kind of go back to AMD again. AMD had highs of 165. Now they're at lows of 87. TSM had a similar move. They had highs of 145. Now they're at 93. Of course, it's not as crazy of a move, but, that's still a pretty big dip here. So I would say they're a pretty good dip buy. I don't know how much lower these chip stocks are going to keep falling, but if you could get this at $93 and, maybe, don't go all in, of course, because you could always average in. Like if this stock maybe falls down to 80, then you could maybe average in around there and maybe have an average price of something like 86, 87, or somewhere there wouldn't be too bad, to be honest.
All right, there we go. So yeah, Tom, I think we covered like most of the top moving plays today. You want to check back in on the overall market?
Yeah, let's go ahead and do that. Let's see the SPY, the NASDAQ, and the Dow here. While the SPY is kind of selling back off, Mike, I will say the SPY was kind of holding its ground this morning. It was doing decent, but it came up. It got rejected right off of some of these SMAs and some of these resistance levels here. So definitely not good to see these rejections. But I will say overall, it's just been really, really flat today. Nothing too crazy. The NASDAQ, same thing, just overall flat. Let's see how Dow futures are looking. I will say Dow futures don't look the best to me, but, I will say the SPY and the QQQ are holding up okay.
Yeah. Alrighty. Let's see. Slick said thanks for the analysis, of course. Hopefully, Tom, I'm just really hoping that the market holds up, like especially like on Wednesday, because it's going to be such an influential day. It can be really, really good, or it can be really, really bad, of course, but it's a big week.
Yeah, I hope it holds up, but if it doesn't, I mean, some of these hedge plays will probably end up really popping, like VIX, VXX, UVXY, stocks like that. I mean, Mike, I know this is going to be a huge event. They're expecting to raise interest rates by, well, apparently, according to the CME group, 75 to 100 basis points. So we'll have to see what ends up happening. I know Powell said 50 basis points, but that can always change during their talk. So I'm just really curious to see what happens here. VXX has been a pretty crazy stock the past couple months. It's been up and down a ton. As we can see, it's been really volatile. Even like last week, look at how VXX was moving and had tons of days where early in the morning it would explode to the upside. So I'm really going to keep my eyes on some of these hedge plays, Mike. I have a feeling that it might be a good week to hedge. Now, I'm not saying to, go all in on this or to do anything like that, but if you have a lot of exposure to the S&P, I feel like it might be worth it this week to do something, even if you want to, maybe get a put on the SPY or a put on like Apple or, some type of stock that is semi-correlated to the S&P might not be too bad, especially with everything going on. Like, what are your thoughts on that?
Yeah, it's not bad. It all depends on where you have exposure, like you said. If you have exposure to the S&P, then it can make sense. There's also, like SPY puts, SPLG puts, VXX calls, kind of like everything you said, Tom, but it just all depends. One thing I would be pretty careful of, though, is like, let's go to, I know you're on SPXS. I just want to check something. SPXS, okay, perfect. So what you don't want to do is, let's say you want to protect yourself from like, I don't know, the S&P 500 crashing. Like, there's a lot of different ways you can do that type of hedge. One thing that I wouldn't do, though, is like with SPXS, this is a leveraged ETF, so it decays over time. On top of that, IV is pretty high right now, so like you probably would not want to buy like an out-of-the-money call option on this because, one, this ETF itself will decay over time, and like it's not. It's like, let's say the stock market crashes like slowly, this ETF can just be very flat or even fall. On top of that, options are expensive on it right now, so I would look at like the S&P 500 or just like major stocks if you are looking to do something like that. One thing I did want to point out, Tom, is the VXX right now. If we look at the VXX over the past, let's say 2 or 3 weeks, it has done nothing but trade sideways. While if we look at the S&P 500, it's been an absolute disaster. So it goes to show you that, you have to be very strategic in how you hedge, because I'm sure a lot of people said, oh, I think the S&P 500 is going to go down. Let me just buy VXX calls or shares or whatever, and probably got burned. So that's like a perfect example of what you have to look out for when you're getting these hedges, because sometimes, these ETFs don't play out like you think they will.
Yeah, and what's really funny is that even the IV on VXX was going down while the SPY was going crazy the past couple weeks. I kind of would have expected the opposite, to be honest, Mike. But, I guess that's just the case with this one. But today it's starting to uptick a little bit. But last week I couldn't believe, like, while it was going sideways to slightly up, that it was falling down that much. So pretty crazy to see the IV down while SPY's IV just kept flying up. So pretty weird comparison there. But man, I think that some of these hedge plays might be okay this week. It's just, like you said, you have to have exposure to the overall S&P. Maybe SPY puts would be a better way to go if you're getting them at the right spot. But, Mike, the thing is like, you're going to need a pretty big move, for those hedges to really work if you do go out of the money. Like, I know you said not to, but, I know a lot of every time we say not to, Mike, I always then go look in Discord, and I always see so many people that did it. So it's kind of funny. But if I do see a lot of people go like out of the money or something on VIX or something, just keep in mind, you're going to need a huge move, and the chances of seeing a huge move are probably less. So that's, you always keep that in mind too. Like, I know it's kind of like an earnings play, Mike, in a way, I know that the IV isn't popping on VXX right now. It would be more of like an earnings play if you did it with SPY, but still, I mean, it is pretty similar to earnings. I'm sure that heading into Powell speaking, we'll start to see an IV uptick a little bit more too.
Yep. All right, there we go. Tom, do you have any final thoughts or anything before we close out?
Yeah, I hope the market does good this week. A lot of these banks were looking okay this morning. I really like to look at banks a lot whenever the Feds make these big interest rate decisions. I know, Mike, the last time that the Feds met, a lot of these bank stocks started kind of falling down, I believe. So I'm going to really keep my eyes on here and see what goes on. Actually, I'm kind of curious, like, what was the date of the last meeting, Mike? Let me see if it's on this, on the CME Group's website here. Does it go back? No, it doesn't go back, I don't think. Or is it over here? No, that's in 23. But yeah, either way, though, it's definitely a pretty big deal there with the FOMCs coming up for the banks, because those interest rate decisions obviously play a big role in them. And I know the banks have been downtrending ever since Powell spoke last time. So that's definitely not a good sign. And if they're continuing to be hawkish, hawkish, who knows? The banks might keep falling. Look at Bank of America on the daily, Mike. Like, it was at $50. Now we're sitting at 35. This sell-off's getting pretty accelerated. Like, if we start breaking below this big support at 35, it's going to be brutal. Same thing for JP Morgan. Big downtrend lately. They were at highs of 172. Now they're at 119. I think a lot of people overlook these bank stocks, and I have a feeling they could even go a little bit lower.
Yep, and then just so you know, the last FOMC was on March 16th.
March 16th. Okay, so not awesome. Let's see where that looks like here on the daily chart compared to these bank stocks. March 16th. Yeah, so you can see that it looks like the banks started flying up for a couple days there after Powell spoke. And then, as we know, they gave those gains right back and just kept going lower and lower. But hopefully the banks start to move up again. I'm hoping that Powell helps them get out of this dip eventually. And man, I hope this is finally the meeting that he helps them come back. Man, since he helped them those first couple days last time, maybe we'll see a nice uptrend this time.
All right, there we go. Well, thank you guys so much for watching today's stream. The market actually isn't looking too bad, at least for now. So, again, thank you guys so much for joining. Before we close out, I want to thank all of you. So, thank you, Mike, Bill, Iranical, George, Shorts, Hunter, Jerry, Corbin, Vicky, Sean, J-Deep, Raymond, I think we got Jerry, Slick, and Couch Potato. Thank you guys so much for joining, and have a great rest of your day.